Larry, I just flew in from London like 48 hours ago.
Good morning. It's a glorious morning in greater Los Angeles. I'm told it's going to get a little warmer, but here we still get cooled by some of the ocean breezes. Welcome to Digital Hollywood Spring Edition 2017. To the Valuing and Financing Entertainment Content, Film, TV, Internet, and Virtual Reality, from VC, private equity, to corporate investment. In other words, we're going to talk about everything and cover the waterfront in 1 hour. I've been doing this now, I think by my count, this is the 21st edition of this particular panel. So we've been doing it twice a year. For Victor Harwood at Digital Hollywood, and it's become a little bit of a tradition, at least for me. And looking out at the faces, some of you were not old enough to come to the first one. That's not quite true. It's 10 years, twice a year. But seriously, we're about to get a generational change at some point, and I have the white hair to prove it. I want to do a quick poll. How many of you in the audience are in production?
Yikes.
How many of you are in finance? Two hands, okay? Maybe three. That's pretty much it. No, how many are in academia? Okay. How many of you are getting into either virtual reality or augmented reality? Quite a few hands. We'll try to cover that as well. One more, so I can get a sense. How many are in movies and how many, let's do movies first. How many of you do TV? And how many do both? Okay, good. That gives me a little sense of where to go with some of the questions. But before we get to that, I'd like to have each of the panelists introduce themselves. We are streaming this live, and the one request is that each of you speak directly into the mic so that we have a good, clean recording. So. Start off with Greg. Just introduce yourself, what your company does, and your primary focus.
Hi, I'm Gregory Melkin. I'm with March Capital Partners. We do venture and growth investing into technology companies, but I focus on digital media for the firm. So a lot of my focus is on entertainment content, but specifically I'm very interested in video games. I've been a gamer my whole life, so I look at competitive video games and technology around that, and we've invested in a few game developers from that side. And then my background also, I've had experience in that I've worked at companies like Fox and Warner Brothers in the business development for television side.
Very good. Sky?
Good morning. I'm Sky Moore. I'm head of the entertainment department at a law firm called Strzok, Struck & Levan. I'm the author of a book called The Biz, which is an overview of the financing for the film industry, and it's on Amazon as part of the product placement portion of the program. You can also get a free version of the book effectively on YouTube. If you search my name, Sky Moore, on YouTube, you'll have an entire course that I teach, and it's free. It's what I used to teach at UCLA for years, and I just put it online so I don't have to do it every year. So you'll get a good education on the film finance side. Is that Anne-Marie Gillen I see out there? Good. How are you? Who's a wonderful client and knows everything about film financing. I also have a Forbes blog that covers the new trends in the industry, and so if you're interested, you can track my Forbes blog. And I have a newsletter, and if you'd like to join it, just email to me and just say, please add, and my email is smoore, M-O-O-R-E, at Strook, STROOCK.com, and all you just have to do is please add me, and you'll get a newsletter every now and then of new topics like what's hot in virtual reality, China, what's happening in the world.
Thank you. Diane, I know you've had some recent changes. So
Yes, last week. So I was just telling my fellow panelists here that I recently had a job change. I was working on Wall Street running a media and technology practice. So we de-risk content creators and providers and also funded network infrastructure plays. So it basically made everything easier in our sense to fund and de-risk, but also reinstancing formats of IP. That was part of it, and also kind of reverting it back to the creators. So that was a big plus for everybody who was creating content. But last week, after working with a client of mine that I thought was so wonderful, I left the bank and went to work for the client. The client is a publicly traded company called Falcon Media House. They're in London, Zurich, Shenzhen, New York. What they do is they're an M&A company that has pillars of business that integrates technology that supports content, the distribution, the ownership of IP, and it looks like a virtual network. We're partnered with Tata Communications. That's a fiber network that goes around the world 17 times. So we are a new distribution network that allows for content creators to go direct to fans, which is pretty revolutionary, and pretty much the reason why I made the jump.
Thank you. For our first round, and we're going to start with Greg and work our way down. It's a very simple question, but it's maybe the most important question of all. It's actually a two-parter. What's hot, who's buying, and what are they buying? I guess that's three.
What was the third one?
What are they buying?
Okay.
What's hot, who's buying, and specifically what are they buying? So, Greg?
Well, I guess I come at this from a venture capital perspective. So I guess what's hot for me is content that engages millennials. That's why I'm very interested in the gaming space. So definitely looking at the success of companies like Riot and League of Legends, and what's going on Twitch in terms of content that people are consuming as game content. So for me, it's very interesting to see, what young audiences are engaging with, whether it's mostly short-form content or watching other people play games. That's interesting to me. So I'm looking at game developers, people who are looking at extending as a brand or even a platform. So something that's just not a one-off piece of content, but if you look at Riot and the League of Legends players, log in on a monthly basis and continue to play, and there's a whole ecosystem of esports built up around that. So that's very interesting to me. On the March Capital side, we funded 2 game developers that we feel will create games that people engage with on a daily basis and create a passionate fan base. I also personally, outside of March Capital Partners, invested in an esports team. And they're competitive, but also the future for that organization becoming a brand is production and content and creating personalities out of our players. So that is interesting to me in terms of the competitive nature of the team, but also the content creation that has to happen in order to turn these players into celebrities that fans follow and engage with. So they're constantly, tweeting and creating content and broadcasting through Twitch and other platforms. What else do I have to answer?
Well, no, that's not bad for a first pass. We'll get back into this in more detail in the next pass. Just as a personal aside, I live next door to 2 of my grandkids, a 4-year-old boys, 4-year-old and 6-year-old, and I've been fascinated to watch what they want. They come over to my office, and one grabs my iPhone, the other one grabs my iPad, because their mother won't let them play with hers at home. But I watch what they watch, and they're fascinated by videos of people playing with toys, primarily dinosaurs and Godzilla, but it seems like for every category. I don't get it, but it's sort of their version of, they're not old enough for video games, but they watch people unboxing toys and playing with them. Very low budget programming. I mean, anyway, I won't bore you with the details. You can go on YouTube and find out, but it's fascinating to me to see how this particular sector is evolving, and it's not just millennials, but it's the next generation coming up. Sky?
What's hot and what's not? Let's start with what's not. Okay. The theatrical world is dead. It's dead. There's no floor. I'm going to tell you the last 3 films that I financed. Jane Got a Gun, like 2 people saw it. Snowden with Oliver Stone, big budget, big film, fantastic film. How many people here saw it? All right, that's about all the people that saw the film. Silence, $65 million, Martin Scorsese aiming for Academy Awards. Huge budget. What? We got someone that saw it. There's the one guy that saw it.
I saw it.
Oh my God, we've got the entire audience for Silence. There is absolutely no floor anymore on theatrical films. You cannot at all guarantee that you'll recoup P&A at all. So to finance P&A, I just think films are dead. And I think Wanda made an enormous mistake buying all those theaters. I would short it. I think that the whole theatrical business is in trouble. So number 1, theatrical is dead. Number 2, China is dead in terms of investing in Hollywood. We had a fantastic party, 3-year run, close to $10 billion. It's like, woohoo! All right, and that party's over. They just got shut down at the beginning of this year.
Can't get their money out
They can't get their
anyway,
money out.
so.
And I've had several deals die where they had promised to fund, and they just can't. And I mean small numbers, they can't. And it's just astounding. They can buy content for China. They can still do that, but they cannot invest outside of China. As long as if you want to sell them Chinese rights, good luck getting through the quota and censorship, and you're going to get a non-revenue share deal in most cases, and it's just going to be a flat fee for a few bucks. They can do that, all right, but beyond that, that party is over. All right, so what's hot? Where's it?
And mind you, you're in the film finance business, right?
I'm in the anything business.
Okay.
I'll do
I did a
win-
good spot for you.
I'll
You can
do-
jump like I did.
I'll do Windows, I'll do whatever, okay? So what's hot? So exactly. The digital is just absolutely on fire. And my favorite story in this, I wrote a Forbes blog. It's now been 3 years, and the title was subtle. It was Netflix will rip the heart out of presale financing. And I wrote it in February of 3 years ago, and the next week they swooped in and bought the very first film that was aiming for theatrical. I was doing it, Crouching Tiger, Hidden Dragon 2. And sure enough, they swept in and bought it for worldwide rights, could care less about any theatrical or whatever. And since then, I had 3 films heading toward theatrical that Netflix swept in and bought. And most recently, The Irishman, Martin Scorsese. I can't tell you the full budget, but I will tell you it's publicly reported as north of $100 million. And I will tell you it's far north of $100 million. And Netflix is buying that, and happily so, because it's going to, and what they are going to do is now set a precedent of having a Martin Scorsese, Bob De Niro, Pacino film, and now the rest of Hollywood will follow. And remarkably, just yesterday, 80 directors from France got the message and wrote a thing pleading for Netflix to come and sponsor, French films or whatever. Okay, so they all figured out. Oh my! And the funniest part about that was in the beginning of Cannes, the auteurs were complaining that, oh my God, there's a Netflix film in competition. By the end of Cannes, you got 80 directors pleading for Netflix to pay them. All right, we're in a brave new world. And along with it is, and I'm betting on, is Amazon, all right, because Amazon is just incredible, and they control the cloud, and they've got, Amazon Prime, they've got consumer loyalty, so I'll bet on them. And then, where the hell is Apple? All right, wake up, they've got this big, so at some point Apple will wake up. I mean, I can't believe they missed the boat, because they controlled the whole music thing, so that was the dumbest move of them of all time. So anyway, digital world is absolutely on fire. Anything you've got, by the way, just aim for Netflix and Amazon. Forget the theatrical, forget pre-sales. That whole game is over. And it's a painful, time-consuming, ridiculous game that I still do. God knows why. I've got a film. I'm literally in the middle of closing a film right now that's taken months, and it's the whole model, and it's hundreds of thousands of dollars, and just painful. And then I've got one going to Netflix, and it's just like, where do we sign? The next thing that's on fire, obviously, is mobile. No one gives a hoot. Kids don't care about watching on a big screen or a theater or anything else. They're just more than happy to watch on mobile. So any content you can target for mobile, man, that's absolutely on fire, and it goes with the digital world, of course. And then the next big thing that's on fire, and I'm surprised how many people here raise their hand on it because you're clearly on it, is virtual reality. Virtual reality is going to swamp this industry, and it is going to replace the theaters. And as the theaters die, what's going to happen is the theaters are going to convert to a virtual reality experience. And the best experience of all is location-based VR, not at home. At home doesn't work for a lot of reasons. 1, you get sick. 2, you fall over. 3, if you're not falling over, you better be sitting down, all right? And so you can't move around. In location-based, it is unbelievably immersive and experiential, and you are transported to a new world, and it's just off the chart. I've done every imaginable one. I've done every possible one because I've really been into this space. And the ones to check out that's ahead of the curve is a thing called The Void. The Void is location-based. They've already opened one in New York. They have a beta one in Salt Lake City. Another one that's coming is called Dreamscape. That's financed by some big players here in Hollywood. And Threshold is doing one that's going to be the equivalent of attending the Playboy Mansion party. So you instantly get the branding and you get the message of what it's about. So the location-based is going to absolutely be on fire. And I will tell you, there's a dying need for content. So if you're out there, the producers out there, and I hear all the time, well, how do you do a story? Trust me, you can do a lot of stories for VR. All right, just think about it. Go see a few examples, and you'll get it's rather easy to do stories for VR. There's no reason why it's that difficult, and it's gonna. And so what will happen in time is the theaters will convert from being what they are now to being the VR experience where you walk through and they'll charge people like, I don't know, 30. It'll be more expensive and it'll be less time, but you'll walk through with your friends and you'll both be aliens or you'll both be soldiers or something, and it'll be a much funner date than going on a stupid dinner and a movie that you do now. It'll be like totally fun. And the theaters will convert, and that's what's going to happen because you've got all this space that's going to have to something to be done with it, and all the retail space that's also being devoured by Amazon that'll also be an opportunity for it.
Oh, that was certainly an overview. I have to admit I had at least 3 deja vu moments listening to you. I started my career as an analyst at Kagan in 1984, so I've had a chance to see several revolutions, especially on the financing side. And when I heard China, I had a flashback to Japan.
And Germany and India.
And Germany and India. And then for a brief period of time, it was insurance companies who were doing P&A funds. And it seems to me that it's about a 3-year time
run.
set.
It's always a 3-year run before they go home and lick their wounds.
So, just before we dump everything into the SVOD pot of gold, that goose, I'm going to mix some metaphors here, that goose may only lay golden eggs for about 3 years. So, and I think part of that is that there is a finite number of subscriptions that they can sell. And when they're not selling new subscriptions, that's when they're going to start looking at their bottom line a lot more carefully in what they're spending on content. So enjoy it while it lasts. Just realize that it doesn't last forever, and you have to look at what's coming over the next hill. So that's 3 metaphors. Diane.
Okay, I kind of agree with you for most points for a change.
Good. I listened to you last year.
Good. But I think that it's interesting times. I think that everyone sees what's happening on the macro level at DOJ and FCC. Interesting times for M&A activity. We see it with Time Warner, AT&T. There's definitely a consolidation, an attempted consolidation happening in the industry. Whether it goes through or not on multiple levels, we just saw with Sinclair and Tribune, and the price points are always north of 3 billion, 18 billion, 20 billion, whatever the numbers are. The point is this, so that delivery systems have become commoditized, like telcos, and so the hardware piece is now, all the wireless revenue on all the telcos is dragging and now dragging down, so everybody's going into the content business. So that's interesting play because, again, that starts opening up more of the typical windows of distribution. To your point about theater being dead, he's a little bit more coarse than I would be, but I do agree with you on that sense. And when I look at numbers around the globe for how people are watching entertainment, it's always on the small screen. Interestingly enough, I agree with you on China too, but the penetration in the markets that become interesting are those like India and obviously continents like Africa, who have a mobile penetration of something like 25%, respectively 25 and 28, with growth factors of something like 300 and 400% a year going forward. They all pay for subscription entertainment. That's the behavior. So as we look at, I think we need to take a step back and look at what's actually happening on a global scale and what's happening on the infrastructure play and who's actually becoming the new distribution channels. Because you're right, everything has changed now. So if you're a content creator and you're owning your IP and hopefully you can hang on to it, there's now a whole new world of where you can go and how you can get there. And you don't necessarily need to go to the big players anymore. In terms of Netflix and Amazon, which you referenced, I mean, absolutely, they're spending a lot of money, but what they don't do for you is they'll give you a flat fee and you'll get a nice paycheck, but you don't have any possibility of hanging onto your IP, participating in what looks like the reinstancing of your IP, whether it's games, whether it's, or drivers as brands, or whatever, the esports race. We are also working with F1, so the F1 drivers for the first time in their careers now they can become brands and go to brands, and that's interesting. And the interesting part about that is the mobile carriers want to hear what they're up to, where they're going, so sponsors start becoming your funding mechanism. So it's kind of changing in what you want to do. Whatever content you're creating, there's a whole new level of distribution channels that you can go to now that is really changing the windows of distribution as they currently exist.
Diane, you said something that actually ties into one of the questions I had briefed for the panel, and it also ties in to something Sky said, which was there's no pre-sale market anymore, and Diane, you just basically said there's no back end anymore because they're buying all rights. Where's the gravy, if there is any anymore? It used to be, you got paid, but you kept some back-end participation, and we know that some of this content lives a very long time. And there's a lot of people who are not even in the business anymore who are still collecting checks. Where's the back end? Is there a back end anymore?
I think absolutely yes. And in the instance of IPTV, which is generally the telcos, you get in front of them, and that's a whole other conversation, what that looks like. But you're funded by exterior properties, and they generally will put you, or depending on the deal that you cut, get on their handset for X amounts of months, so they market this. But so in those instances, you can cut yourself your IP deals for territories, for different instances of the IP that you're own, so it keeps on going. That's what I see is currently happening.
Greg?
Yeah, well, I guess I'm interested in extending, so, I mean, beyond just the sale of the content, I think the back end is also, how that lives beyond in terms of extending it into other media, or merchandising it. So, to me, back end is building a brand and a franchise and being able to do that over and over again, sequels. So it's not just the original piece of content that you're producing, it's the audience and fan engagement around it.
But the other thing that's happening too, when we keep talking about mobile, is for the first time, if you're an IP creator, content creator, and you get a telco to support and deliver your content, you can generally cut a deal for the first time that you can participate in seeing the analytics in the database that's created on your behalf. And that's an instant sell-through mechanism for follow-on content. And that's something that's worth anything else. And that content is, any acquisition that's done is based on users and the database that supports. So for the very first time, And even studios, they don't have the ability to go direct to the consumer anymore. There is no pipes for them. They use social networking, they use YouTube, or they use the typical outlets. But mobile carriers or IPTV allows you to go directly to the fan. So you start participating in the databases built.
Sky?
I vote to sell out and get some money up front. In my experience, most films lose money, and when you have a participation, and most of the time you're sitting around waiting for an accounting statement that has a bunch of zeros on it. And I will tell you, in my experience, 90% of the time when you sell on some participation for a back end, you never get it, and you end up with zero. And I would much rather sell out to Netflix and make a 50% profit on my thing and just be gone and be done and move on. I mean, that's like for the film in an industry where most films lose money and you can walk away with a guaranteed profit. Happy day. Like, forget the back end. I'm just happy to have a front end.
I'm talking about TV more than film. I'm talking much more about TV.
But even TV, right? You can sell out, fixed. You can sell the episodes to Netflix at a profit, man.
The things you can do with mobile carriers, and I'm going to keep going back to this, is because then you can identify those territories. This is something you can do yourself because they're out there. So they become your foreign distribution network, which actually you can borrow against, so that you can, and that's how the funding starts to work.
I met with a private equity investor yesterday on another project, and he mentioned that yes, Amazon and Netflix are buying all rights, but where there's some wiggle room is the term. The content isn't necessarily valuable to them for perpetuity, and if anything, Netflix, if at least if I can believe what I've read, they used to have about 100,000 titles in their catalog. They've actually trimmed it back to about 10,000. So that's a lot of library content that isn't getting, they may cycle it in and out, but it's not just sitting there tied up. So you know what I'm going to do? We've got about a half hour left on the panel and it goes fast. I'm going to open up to the audience for Q&A because I want to make sure that we get your questions answered. I've got a few more I can go to, but in the past, right down here in the front.
For Sky, among the things that you didn't say were hot was crowd investing, which is a topic. I wonder what your thoughts are on that.
I have not seen that work on any significant scale. I've seen it work when someone has a trademark, trade name. You want me to repeat the question? His question was crowdfunding. Crowd investing, called crowdfunding. There's a number of sites that have there's indiecrowdfunder.com, there's Slated, there's a number of online sites now that have crowdfunding for films. It is typically been lower budget and typically requires some kind of trademark marquee value, either a well-known producer, director, star that somebody attached. One of the benefits that I've seen one of the benefits that's there that has not yet been exploited is that you can now do advertising for a private offering. And what I haven't seen, if you combine real advertising with crowdfunding, it could work, but I haven't seen that. I mean, and it's odd because they liberalized the rules a couple of years ago that for what's called a 506 offering to accredited investors, you're now allowed to advertise. And so when I open a trades, I'm surprised I yet haven't seen an ad for an offering for a film, because if you combine that with crowdfunding, it could work, but no one's done it yet. So
I don't see very many accredited investors, which are pretty, net worth and annual income north of 200,000 and net worth of, I forget what it is. Only been a week, but so I don't see many of those people going into crowdfunding situations because of the sophistication of the investor. And then I think that some of the things I've seen with crowdfunding is the liability that you incur as a creator.
It doesn't take that many though. That what happened. There's a lot of accredited investors that are investing really for they want to be able to be a part of Hollywood. They want to go to the parties. They want to get an executive producer credit. And we did The Butler, for example, and we had 40 producers. All right, they were all accredited investors, and each one wanted a credit, and they want this, so it's a whole. We can finance pretty decent films with accredited investors. You know, you can do it. 'cause-
Oh, I'm saying they're fine. I just don't think I see that they're participating in crowdfunding situation, 506Cs.
Yeah, but I
That's
think
not
the
typically
danger
where
also
they
there
go.
is expectations. So
Right.
you have to give them a good experience, so they're not going to want to return for a second project. And I think that's the real key there. So it's very difficult, I think, to fulfill someone's expectations. They want all those credits and things
All
like that.
44 of them
And
would
then
kill 'em all.
for them to think, that was a great experience, I'm going to do that again.
You know,
It's like Legion M raised $1.1 million on a Reg CF, which allows you to have 500 non-accredited
That's-
investors and 2,000 investors.
Zero project.
Yeah, you can have zero projects. They did it on a slate with
Right.
0 stars, 0 projects, tons of advertising. They spent about, I think, $40,000 on their ad campaigns on Facebook, but you can have 500 non-accredited investors, so.
Yep. Reg A plus. No, I get it.
That's what I was asking.
No, Reg A plus is another one, but the problem with the Reg A, this is for the rest of the, there's an exception for doing what is a kind of a quasi-public offering. The problem with Reg A plus is you have to do a very thorough prospectus, and it is almost the equivalent of an IPO S1 form, and it is rather daunting, and the cost of it often can be like $200,000 because you need audited financials to do a Reg A plus, and so very few people have pulled that off.
And the due diligence requirements are more than anybody here wants to go through because there's 24 pages of them. So you need to fulfill in
It's
data
a
room, so
painful experience.
That's not
Yeah.
a good option.
Yeah.
question?
Would you please talk about the issue of net neutrality and what the wheeling and dealing and public sentiment and telecom influence on the future of content distribution?
There are probably other panels that are more focused on net neutrality, but if anybody has a comment.
The only 2 cents I would add is that customer bills for Netflix are going to go up.
And the reason is that the MVPDs and those who are providing high-speed access will start charging very heavy bandwidth users like Netflix surcharges to be able to get a high-speed, a good quality stream all the way to the home.
There you go. There's where the opportunity is the delivery mechanism and the quality of the stream and the reduction of buffering. So whoever does that is going to win major.
I mean, when all the talk about skinny bundles, it doesn't matter what the price of the skinny bundle is if you're constantly waiting for buffering. So you're probably going to wind up paying a little bit more for the high-speed access, and when it nets out, I'm not sure how much of a bargain it's going to be because there's a lot of content that you won't be able to access.
Well, the CDNs make it virtually impossible to have any profits from that because of how much they charge in streaming. So it's taking 30 to 40% of the budget. So the CDNs are making a killing on this on the delivery, but the net profit is eroding because of that. So there's another opportunity that needs to happen.
Getting back to the financing side of the business, usually by now we would have talked about tax credits, state tax credits. Are there any left?
Yes,
And,
yes.
and how, what's hot? Where is it hot?
Tax credits, what's hot? Louisiana is not. Georgia is hot.
Australia at 45 is very high.
Australia is hot if you can make it an Australian content, film. UK has a tax subsidy program that is still working. The Ingenious is monopolized that more or less. But what's happened right now is that Louisiana realized how stupid their program was because they were the truth is Hollywood's a bunch of carpetbaggers that come and steal all their money. And now Georgia has not yet woken up to the fact that they're the next sucker. All right, and they're giving. I mean, it's so unbelievable to watch what rolls through there as to get a credit. I mean, stuff gets charged to Georgia that has no connection with Georgia at all, and it creates no economic benefit for Georgia at all. And it's just to watch it. It just as as a policy perspective, it's so beyond stupid. If they and of all things to subsidize like films, like really, like that's like not hospitals or schools or something. I mean, like really. But anyway, but Georgia's hot, and they're just giving it away, and it'll last until they wake up and realize how stupid it was.
So the plus of tax credits are that we can cash flow them. So they act almost as a loan, and you can get cash
Absolutely.
towards them. So that's why we use them.
Absolutely.
And a state to go look at. Oddly, when I was doing this, looking for this search a couple months ago, Massachusetts, of all states, is now high. I think it's 35%, but they're also granting tax credits on games that support your content. So you can that was something I just learned about and went, holy crap, they're really getting very progressive on that. So by all means, go look at Massachusetts, start thinking about that too, but I like tax credits.
From the game side, Canada is a very popular place to set up. You get free employees, like sometimes in Montreal, I think if you hire like your 6th employee is free, basically, if you've got 5 developers on the game side there. So a lot of companies set up there.
Question down front?
What about tax credits for VR and AR? Does that exist?
I haven't seen those.
You haven't seen that.
Can I answer that? Right now, the Georgia legislature, I found out 2 weeks ago, making its way through the assembly, that they are giving up 45% tax credits on post-production, VR, that whole thing is coming down the pipeline right now.
Go Georgia.
I saw a hand go up here. Yeah, go ahead.
Talking about VR, AR, and games, how do you see current climate of investing into the VR game and content?
Short form, as an ancillary revenue stream until it becomes more defined revenue model. And like Skylar said, you get sick and all that kind of stuff. I've tried a bunch of different headgear and everything else. I still vomit, but the point is that I think it's absolutely valid. I think that studios or networks or whoever's owning the content needs to step up and support this and treat it as a marketing expense. I think I said that in a dinner last time, nearly got thrown out by all those guys. Because I said, you have the balance sheet to support this as a marketing expense. It's your duty to be absolutely innovative and incorporate VR into your projects, even as a marketing expense, so it gets proliferation, improves the model. That's an estimate.
Yeah, I also go back to what Skylar said, in terms of location-based is what's most interesting. From a VC perspective, I find it very difficult to support something that people are going to say is going to have mass adoption in-home. I just don't see that happening from the VR side in terms of a company becoming very successful with the in-home VR content.
We have a question all the way in the back. I know you've been patient. Go ahead. But speak very loudly, okay?
Okay. I'm curious if the panel has anything on the distribution model for location-based VR. So if you are someone who's producing that, what can you tell us about where do you take it? How do you get it out there? What's developing?
You go to the companies that are doing location-based VR. That's the answer. You just track them down, and that's your buyer.
I heard that some people are aggregating those now, like the people who make raw data. Do you advise using a middle person or?
I know of aggregators for at-home VR. I'm not aware of aggregators for location-based VR, but maybe
I think IMAX has opened a new location-based store on Fairfax Road
Right.
at the Grove, and there actually you can go in and have like consumers.
But I wouldn't call them an aggregator of content to go to other location-based VR. They're not a distributor of location-based VR. I'm not aware of one.
Okay, we have a question there. We'll get to you. Go ahead.
So you talked about location-based or at home. What about enterprise use for VR? See that going?
What is it?
Business applications for VR.
You mean like
enterprise.
Endless. I mean, if you're talking where it's going to be for military, hospitals, surgery, awesome, unbelievable. Where you can shooting, anything that is too dangerous to do in real time, absolutely huge, absolutely huge.
And actually, there's probably a half dozen DARPA projects.
But military is all over this, all over it, all over it.
Okay.
I'd like to re-examine the idea of telcos as potential points of finance, other than they're right there in the pipe. What other value do they add to deal making or helping deliver, scoping a project that will be delivered as a one-off or episodic, delivering IP to the consumer?
They have an existing customer base, so there's your audience.
Well, I'm saying they have the audience, they have a pipe to the audience, they have a billing mechanism. But when it comes to framing, the financing of the film, they're studio side, they're looking at a lot of these, the actor, the writer, they're looking at these intangibles to say, let's pull that together, and because those things make sense to finance, and this place over here has a ready audience, but doesn't mean they're gonna get content that will make them stay on that pipe.
They have a finite subscriber base as opposed to a theater, which is random attendance. So and there's industry metrics that say, look, we think we're going to get X penetration of this market based on this. It's largely based on the content, it's based on the locale, based on the territory. And so there's so much historical data that proves that, so you have a better indication of predicting revenue in a certain market.
I'd like to know, let me say this way differently. Will telcos necessarily finance better content?
Telcos are acquiring content. They're
Well-
buying, there's mergers, M&A, so what's the question again?
Will they finance better? The keyword is
Will they
better.
finance better content?
Better, yeah, I'm asking a qualifier, something that's like, it's an evergreen.
I think that they're going to be more open to more types of content, because what do they have to lose? They're already a delivery system that's already been commoditized, so they need to, like I said, their wireless revenue streams now a drag on their overall net. They have no choice. So based on locale, and that's what's happening, based on locale and where you're going in a certain territory. So again, just don't think American market.
Conceptually, at least, they will finance better content because they need to differentiate themselves. I know DirecTV now, which is owned by AT&T, is acquiring original content for its subscription skinny bundle service that is exclusive to them. So whether it's better content, I don't know, but it's definitely unique content to them.
And it's less risky because they already have a sub base and it's debt. So if you already have a sub base, you can borrow against that, and that's what's happening.
Question down front?
One of the other super hot, easy to get investment areas right now is AI and deep machine learning. Do you see any way that's being integrated into the creation of content or the financing of these types of solutions, and how?
The question, just for those in the back, is about AI and machine learning content. Anybody have a perspective on that?
Not yet.
I would say from the marketing side, yes. I mean, if you can analyze what messages and images resonate with people, yes, that's valuable in terms of then what you serve up to people. I don't know in terms of narrative storytelling and exactly how that would work these days.
Do you really, I still have trouble with the notion that a machine can be more creative than a human, which is.
It will be. It will be in time.
I'm not quite ready.
They're making music. They're creating music.
But have they created a hit yet?
I don't
It's
know.
not
but
about that, Larry. It's about like you just said, it's about the collection of data, and everybody knows data is valuable. The thing is the interpretation of data, which is where it all falls
Yeah,
apart.
I still think we provide soul, and I'm not sure I'm ready. There's the machines to me are still soulless, but that would be an interesting topic for a future panel, which will hang around at least a couple more years to do. Question in the back?
Yeah, hi. Can you talk about live streaming from a digital content perspective, like your thoughts, hot or not?
Hugely hot. I think it's an enormous opportunity. Just because, in particular, if you look at music, ask Live Nation about that, and the delivery systems for that. I was at a certain record company in New York a few weeks ago, about 3 or 4 times. Oddly enough, they mentioned, we want to become a media company. Wait a second, you are a media company. But how do we go direct to the fans? How do we own the channel? We're not doing it on YouTube, but nobody goes to our site anyway. But how do we become the pipes around the world for like a small concert from, somebody's living room or a small venue, and that gets into a whole other thing with labor unions, so I won't go there. But the point is, it's enormous. And then the bands that are off label, where I'm watching it happen now. And I'm watching the sponsors come in behind that are covering the entire cost to do this. And again, it goes back to the data collection. And so once you create a channel, guess what you get to do? You get to go back to that channel. So you already have a dedicated audience. You push back once, you push in a second and a third time. Keep feeding the audience. You own the data, you own the delivery. So hugely hot.
Take a look at EDM TV. It's Electric Dance Music TV. They're doing live streaming, 360 VR. It's really cool, and so it combines live streaming with VR and the music experience.
I'd really fall over on that.
It's pretty cool. It's pretty cool.
I'm beginning to be surprised at how much content I am consuming that is effectively live streaming or replays of live streaming, especially in the finance area. There are a lot of businesses that are now based around live streaming, and I think that as the appointment viewing declines, that we're going to see more live streaming that is ad supported. One of the things that Netflix and Amazon Prime, Hulu and YouTube Red don't really do is provide a premium place for a 30-second TV commercial. Certainly Netflix and Amazon Prime do not.
Here's something that's
And there is still a huge demand for aggregating audiences for the good old 30-second commercial. And that's not going away. And I don't think enough people are actually looking at that and tapping it. But go ahead.
I was going to say, I see instances, we can't name them, where big brands are creating their own channels, which we already know. BMW has been doing it for years, didn't do it well. But exactly. But in terms of supporting live content, where it brought to you by Tide or whoever it is, and they'll leverage their audience, so that's a plus for anybody who's going live, plus who's ever doing the live. So the convergence between the two, and the sponsorship that supports it, and if it's anything that's subscription, but the massive audience that they grab for that. I'm watching this happen currently now with probably 10 different opportunities that are moving in this direction. And the money's rolling in from the sponsors. So sit back, don't have to finance it, the sponsors are doing it directly.
You got to believe that Procter & Gamble is all over this and that there's money to be made out there
They
with them.
originally started in the soap opera business, they're back.
They are why they're called soaps.
Exactly.
So let's, another question, there in the back.
Back to VR, with her question, if there's not a lot of distribution available for VR, but we know that we want to go more long-term versus short-form, is it wise for a filmmaker to incorporate that if there's no outlet for it to be seen? Or do you do both? You make a standard feature film and then VR and then a VR version? How does that work?
You could use a short form example even before the movie or the TV show is broadcast, so it's not the actual footage, but something in support of the marketing. So you do that short form, it's less costly, you start to obviously build the databases built around that. But so I don't know how you're gonna make the money back if you do it long form.
They did it for The Martian and for Alien Covenant, and Ridley has now started his own VR division. And both of those were by the marketing, paid for out of marketing.
You listen to us.
Yep, yeah, exactly. I've done, the Fox is ahead on the content creation. They created Fox Lab under when Jim Giannopoulos was there. And I'll tell you, I did The Martian, and it is fantastic. It is just, so they're really ahead of it. And then Madison Wells, which was Odd Lot, is also creating content. And there's a number of companies that are creating content both for at home and location, and location based. And you just got to partner with one of the companies that is doing it.
Something we haven't talked about and probably should just mention briefly is 4K and beyond. I have a 4K TV set. Finding 4K content is almost impossible. There is some on Amazon, some on Netflix, but I have AT&T as my data provider, and watching it without buffering is almost impossible. So, should content be mastered in 4K at least for future-proofing purposes? Yep, everybody's agreeing. Okay. Netflix requires it now. Okay. We're coming up. We've got just a few minutes left. Question?
A question in terms of virtual reality. For production, when do you think there'll be enough critical mass to make it profitable?
That's a variation on the same question we've heard now 2 or 3 times. It is about the distribution.
It depends. If you find the right source right now, it's profitable. If you find a buyer now, it is and there are buyers. So if you just create content without having a buyer in place, you've got trouble, right? But you partner with somebody now, you've got a built-in profit. There's a demand for VR right now, a lot.
But but that's always been the way. Pure spec content is really just speculative.
Yeah, that's not gonna.
Hollywood for decades survived and did well based on pre-sales, and they didn't go out and shoot until they had some pre-sales. They might need a little gap financing and a few other things, but the key was you don't start rolling until you have some deals in place for distribution. And I don't think VR is any different. All the way in the back?
Any idea what those deals look like? Are they more like a theatrical box office model where it's a rev share or?
Totally. Yeah. I mean, for VR,
Yeah.
totally depends. It's a Wild West. Yeah, Wild West.
I think it's just another marketing thing. So, I mean, if the story's great and you've written something good and it's great content, that goes first. VR is another buzzword, I'm going to say it. And I have actually had VR clients. Now I can say that. But, I mean, it's another buzzword. And yes, it's going to get more adoption. But in the time being, if you're here, how do I get my content financed? How do I get it distributed? It's based on the good story.
A question for Skylar. If you could maybe expand on your talking about the slowdown in China. I know last year the theatrical box office grew like 14% versus 35% in 2015. And then I've been hearing that one is like unable to close the $3.5 billion acquisition of Legendary Pictures, Legendary Entertainment. So I'm just wondering if you think, because they've been so acquisitive, China, investing in a lot of companies like IM Global, do you think that's kind of reverse course? Or
It has reversed. Got it. China market is vibrant and great. And I would say to everybody, if you want to get paid, go to China and go do what Rennie Harlan did, which is now become a director in China and make China films. I've got another client, Stephen Hamill, partners with Keanu Reeves. He's in China. Like they've just gone. Great. All right. So if you're in China, it's a happy land. If you're in Hollywood looking for China money, you're in trouble because they just shut it down at the beginning of the year. The China government said, enough. You guys, you stop throwing your money away in Hollywood, throw it away here. And so China just shut it down. And so they just can't get currency out of China. And they also can't China stopped the listing of it was always this mousetrap game where it was always I'll find somebody who finds somebody, and we're going to go public in China because the market is insane on the Shenzhen exchange and in the Shanghai exchange. It was insane, the multiple. So that got shut. China said, enough of this lunacy, this irrational exuberance. We're shutting that down. So they stopped the outflow of currency and they stopped the listing of a bunch of companies, and it just stopped. Like so the whole $3 billion a year for the last 3 years just stopped.
So what do you think of like when they acquired IM Global? That was for $200 million, and then recently they bought 50% of Millennium Entertainment.
They just got under the wire. That was last year. That was last year. That was before they shut it down. So the party ended. Yeah. Party's over. They got in under the wire. Yeah.
Question?
Sure, especially with regard to the new latest announcement that Facebook did regarding augmented reality, do you see more future in augmented reality or virtual reality, and how's the investment in each of those areas?
Again, I vote for location-based VR. That's where I think it's ultimate. The augmented was fantastic. Pokemon, right? Go to prove that augmented worked well. I'm just a better on the location-based VR. The experience of being inside. There's nothing remotely comparable to be able to walk on Mars and really be there. I mean, and you can't do that with augmented. So it is mind-blowing. You can be anywhere you want, and you're there, and you believe it. You could walk a tightrope over the Twin Towers. You can be on Mars, whatever. And it's so beyond where we are now that everybody will want that, is what I think.
I think augmented reality works very well in an advertising context. And it's something that similar to Pokemon, but in which an advertiser really goes viral. Yeah. One more question, all the way in the back.
So valuations for back ends are going to be getting just more and more expensive for proven content. Do you have a view on if that's ever going to change?
Say it again. Valuations.
For back ends.
What do you,
What do you-
define your back, how you're defining back?
To value it as expensive, or I didn't understand what you're saying.
So Mark Gordon, he sold his business and it was incredibly expensive. And from what I see, when I look at new back end deals, the discount rate or the cost of capital that people are applying to that is just ridiculous.
Was.
I guess, do you see that changing at all?
Oh, that party ended. The whole reality TV thing just crashed. I mean, that's over.
Outside of reality TV, like syndicated shows that are on TV
Well, but
now.
yeah, there's always some new whatever that never lasts that long. I mean, the reality TV thing was a classic example, and Mark Gordon sold at the absolute height of the market, and now there's that party's over.
I think people got a lot smarter in the past year or so, that.
Smarter on that, but then there's always something else stupid that people are doing. So.
And the valuations that actually Wall Street puts on things is just insane, because I can't figure it out, what they're doing, and I'm not sure they know either. Kind of. Yeah, they do. I'm here to tell you.
Well,
they
they
do.
at least make up reasons to justify what they want.
But it's getting harder and harder because technology has made everything that much more transparent. So when you push on that, and the analysts or anything, what they're doing, when you need the actual facts, it's just based on historical stuff, which isn't flying anymore.
The fact is, Netflix at some point is going to have to be valued like a real company. Even Amazon at some point is going to be valued like a real company. So
It's funny, I had to do something to reference a company that was looking like it was Netflix, and I went through the entire valuation from 1997, which was hard to find when Netflix started. And then I found that it took 20 years for them to actually get to, it only started in 2014 when they really started, and they abandoned the physical DVDs and all that nonsense and got into streaming when things started making sense for them on the valuation, because up to then, I think it was, I looked at 2000 and they were worth like, I forget, 780 million in 2000. They were still in physical, but so it was already insane, and nobody poked them hard enough to make it realistic. And what was happening is it just kept doubling and tripling and became an X factor in the subsequent years up until 2014. So there's another instance of just do the math because it's going like that, and here's the valuation.
we could say the same thing about AOL, and we know how that story ended. Speaking of ending, we're at that point with this panel. Thank you all for staying with us. Thank you.